circle right here is all of the workers in the United States. Workers in US. And the reason it's US is because I don't care about other laws. You know, if you guys have a question about Mexican employment law, I'll find you a Mexican lawyer. He was just there. So this is workers in the United States. And what I'm going to do is I'm going to end up drawing two fuzzy lines. And the reason they're fuzzy is because the law is not black and white. And people try to skate really close, or maybe they jump on the other side of the line, and that's where they get in trouble. And I'll break it down on like how they can get in trouble, but basically on my left side, I'm going to have contractors. And I've heard lots of different names for these. I've heard them called freelance. I've heard them called independent contractors. We've all heard people just say 1099, which is for the IRS form that is given to an independent contractor as opposed to a W-2. I'll just skip ahead, that's the W-2 over here. And so 1099, has anyone ever heard any other names for independent contractors? Consultants, that's a good one. And so over here, these people work for themselves. They're running like their own mini businesses. So they're their own employers, they're their own employees, they have to worry about their own taxes. And this is a whole different conversation, if they set up as an LLC and it's a pass-through, they have to pay self-employment tax on all of their profits. Maybe they set it up as their own little S-Corp, which could be either an LLC or a corporation, but whatever it is, they are responsible for all their own taxes. And that's why employers play the game. Employers play the game because just by moving somebody who might be right here over here, they just easy numbers save 7.6% on employment taxes. Not to mention, they don't have to worry about having payroll, they don't have to add that person for workers' comp. So in Florida, for full-time or part-time employees, you have to have workers' comp insurance. Quick side note, if you're in the construction industry, all you need is one employee and you have to have workers' comp insurance. But let's just say that I'm running a small business and I have 3 people who regularly show up, or no, let's make it easy. I have 5 people who regularly show up to the office and work for me. And I figure that I can call them independent contractors. I'm going to save 7.6% on their payroll just right off the top. Now, that is the employer contribution to federal unemployment tax, Social Security, and Medicare. And so on your pay stub, if you're a W-2 worker, you'll see that they automatically take out 7.6% from you, and then your employer kicks in another 7.6%. So if I pay someone $100, it just costs $100 if they're a contractor. If I pay a W-2 person $100, it actually costs me $107.60. Just easy numbers. Again, not including, if I take those 5 and I make 4 of them contractors, now I don't have to get workers' comp insurance if I'm running an office like mine, and that's just another way to save money. So a lot of companies, they play games around this line, all right? This line is, here's who gets involved. You get the Department of Labor getting involved. You get the IRS getting involved because it's a lot of tax issues, so the IRS. Here's a one. When you're a W-2, the employer has to withhold just regular income tax, right? That's why a lot of people get a refund in April. It's not all because the government's just giving you money. It's because you've actually overpaid throughout the year, and then the government gives it back. If you are a contractor, then it's 100% your responsibility to pay the IRS, and guess what? A lot of people don't. So the IRS gets mad at the employers, so the IRS gets involved, and what they'll do is they'll say that you're misclassifying. That's the word we use. It's misclassification. And the misclassification, to put some teeth into it, is if the IRS says that you've misclassified your receptionist as an independent contractor, then there is what's called the Trust Fund Recovery Penalty, the TFRP. And that is 100% of what you would have had to have paid in employment taxes as a personal liability on the owners. The owners, the managers, and anybody with signatory authority. So if you're even just working for a company, but you're kind of running the office, and you guys get this wrong, the IRS comes in, and they have what's called a 25-factor test. And the 25-factor test, if I can boil it down to one thing, is who is in control. Does she make her own calendar? Does she bring her own tools? Does she tell me when she's going to work? Or do I tell her when she's going to work and she has to ask for time off? She has to ask for vacation. She uses the phone I tell her to use. She comes on the hour. I had this one. It was a freelancer, which, by the way, was because they were in the artistic industry. They were in film production on Miami Beach. and they called the girl who worked the front desk from Monday through Friday, 9 to 5. She had to ask permission to go to the bathroom. She had to ask permission to take days off. They called her a freelancer and paid her as a 1099. And it was a small business, and I think they were saving money, and they were like, oh no, like everyone here is a freelancer. I'm like, listen, you control her. So that's this line. This line is the line of control. You control this person. And now the IRS has a 25-factor test. You can Google it. Just IRS 25-factor test. The state of Florida uses 12 factors. State of Florida can also get involved. That's the Department of Revenue here. And then thirdly, who gets involved is the courts. So, actually, I'll get into the courts next. All right, so over here, I said there's another fuzzy line. Over here, we have what's called hourly, and over here, we have what's salary. Now, all of these people are going to fall under our W-2 category. And again, companies will play games around this line. Now, it's for a different reason. These people are called non-exempt, and they are non-exempt under the Fair Labor Standards Act. It's the law we've had basically regulating labor. It's a federal law since the 1930s. And then people over here, they are called exempt. So the law reads something like this. Everybody is non-exempt who is a worker in the United States, who is an employee. That's the word they would use, employee. So let me start over. Every employee in the United States is non-exempt except for the ones that are exempt. And the ones that are exempt are professionals, executives, and they call it administration. What they really mean is people who have managerial authority. Hiring, firing, making purchasing decisions, signing contracts, or their opinion is given great deference. So we, at one point, got to a point that we needed an office manager, and I took somebody who was an hourly, non-exempt receptionist or assistant, and I promoted her, and I said, all right, from here on out, I want you to run the office. I'm not going to pay you hourly. I'm just going to pay you a salary. And here's the thing, salary, we don't have to keep track of time. They're not entitled to overtime. So what are non-exempt people entitled to? They're entitled to minimum wage and overtime. Overtime is time and a half of their regular hourly wage, 1.5 times their regular hourly wage in a 40-hour week. Now, here's one that most companies do bi-weekly payroll, right? They'll do the payroll on the 15th and the 30th. And they'll say, oh, I pay overtime whenever they work more than 80 hours. It's wrong. In week 1, the person works 45 hours. In week 2, the person works 35 hours. That only adds up to 80. So by that formula, I'm not paying any overtime. It's a 40-hour week, technically defined as like midnight on Saturday through midnight on Saturday. So if in that first week they work 45 hours, then they're entitled to 5 hours at their hourly wage of time and a half. Now, why do companies play games here? And I've done this lawsuit. It's actually a crazy lawsuit. This lady worked for a law firm, and she quits and it leaves in bad terms and goes to work for another law firm. Actually went to go work for Brian Barakat. And she's working for Brian Barakat, and she's telling him how sexist they were, right? And how she wanted to sue them for discrimination. And then she goes, and you know what? They never even paid me overtime. And Brian's ears pop up. He's like, what? And he's like, yeah, I was a receptionist. My job was to answer the phone at the front desk, and they just paid me a salary of $38,000 a year and told me not to work overtime. And some weeks they made me stay late, and sometimes they even made me come in on the weekends, and I would ask, I'd say, hey guys, do I get overtime this week? And they go, no, because your salary. And by the way, part of the theme here is that the employer can't decide, right? The law decides. The law says these people are contractors, they have independence, they have control over their own. I use the example all the time of you hire someone to paint your house. You're just hiring him one time to come and paint your house. You don't give him a paintbrush. You don't tell him what day to be there. You tell him what day you'd like it done by next Friday. But if he doesn't come on Wednesday because he has something else come up, what do? Like, you're under contract. Yeah, I guess you can maybe, if you read the contract, you can terminate the contract. But most people wouldn't do that. You just suffer through the contractor and then leave him a bad review on Yelp, right? It's the same thing here. So the W-2, what the employer will do is they'll call a non-exempt person exempt. The law decides, not the employer. So employers make these games, and this is where they get in trouble. There's an old thing, we call it substance over form. You might call it a contractor, but if the person's job is to sit at the front desk and answer the phone for 40 hours a week, and you might call it a salary, but if the person has no professional skills required for the job, no executive authority, right, and no administrative authority, they're not making any decisions, they don't have the right to just fire the aquarium guy and hire a new one without checking with someone. And so the girl who Bearcat got, she was put over here. And to be fair, if you add up the 38,000 and you divide it by 40 and you divide it by 52, she was getting more than minimum wage. So this wasn't going to be a minimum wage claim. But what it is because her job description isn't one of these three, she's inherently here. So on that week that she works 41 hours, and then here's where the rub is. The law is completely on the employee side. 100%. And so what happens is you get the demand letter. And the demand letter says, your secretary, who you were paying salary, was not paid overtime for all of these different weeks. And here, I'll change the story up. Let's say that the person just has a vengeance out and lies. And you get the demand letter that's like lies. I worked 100 hours every week for 2 years, and everyone's like, dude, no she didn't. Like, no way. Like, the office wasn't open 100 hours a week. And there's no way that anyone worked that much time. But here's the thing. The reason that employers will put someone on the salary side is to save on the record keeping. You're just making it easier to run your office. You're just like, yeah, I don't want to have a punch clock. Those things, like ADP charges like $500 a year for a punch clock system. Like, you don't want to pay that. So you're like, you know what? We'll just put it in your contract. Don't work more than 40 hours. You can leave on Friday when you think you're hitting 40 hours, but just stay over here on salary. Then 2 years later, you get the demand letter from this. This is one law firm. It's like a plaintiff law firm where they do all these cases for free. And here's why. Because you get that crazy letter, and the crazy letter says that she worked 100 hours a week, which is 60 hours of overtime at time and a half of whatever, if you take the salary and divide it out by 40 and 52, what it would have been hourly. And the law says that if the employer can't 100% disprove her case, she wins. How do you win if you're the employer? You have to have time records and you have to have payroll records. Most of us have payroll records, unless we're totally a cash business, which I've had that case. Guy was running a restaurant, like a Thai restaurant on Kendall Drive, and he was like, oh yeah, we just use cash, and I don't write anything down. I'm like, all right, well, and he got that demand letter from a guy he fired for doing drugs, caught a guy doing drugs, fired him, 2 weeks later gets a lawsuit. And it was that same case. The guy said he worked 100 hours a week, and the restaurant owner was shocked, and he's like, it's all lies, this is extortion. It's like, yeah, well, where's your time records? We don't have any. Where's our payroll records? We don't have any. And this is the dilemma. You can fight and win, and you're going to pay your lawyer $50,000. You will never get it back. The law does not entitle the employer to a return of attorney's fees if they defend and successfully defend. You fight and lose, you pay your lawyer, you have to pay the other lawyer, and you have to pay whatever the added up damages are under the Fair Labor Standards Act. So now maybe like $50,000 for your lawyer, $50,000 for the other lawyer, plus maybe $25,000 in unpaid wages. Or you can settle today for $15,000, and it's blood money. And so only if the employer wants to take a stand and show these people that they're willing to defend themselves and that they can perfectly prove that they had time records and payroll records, right? No, I have payroll records, I have time records, and I'm willing to spend the $50,000 to send a message to all these people that this is a waste of their time. And now hopefully the next lawyer who looks at one of these cases will say, no, I'm not going to sue that guy. Like, look what happened the last time. And that's your only defense. But imagine that's your decision as an employer. You're like, I either pay $15,000 now or I pay $50,000 over the next 2 years. So anyways, this line right here is who's the boss, basically. Right? So these people, Nancy, my office manager, I changed her job description from what clearly was fitting in here, and now it's here. And so if I ever had to defend that in court, I think I could successfully do it. So let's look at what that would look like. Someday I get a lawsuit from Nancy, and Nancy says, hey, you were paying me salary, you should have been paying me hourly. And I'll defend it, and I'll say, no, here was your job description, you totally had authority to hire and fire our vendors, you had authority to hire and fire your own team of employees, right? And so you're over here in this little category. And I said I would mention the courts, and I just did. The courts will ultimately be the ones interpreting this. So here is a nightmare scenario. You are an employer, you have everybody you can on salary, and you have everybody you can on independent contractor, because you're trying to save money on the record keeping over here, and you're trying to save money on the taxes over here. That's what you're trying to do. And the Department of Labor, which is federal, or we have the Department of Human Relations, which is here in Florida, which basically has abdicated their oversight role to the federal government, but it still exists, the Department of Human Relations. They sometimes get involved, but not usually. And so then we have the IRS and the Department of Revenue, and so it usually comes on the federal side. You'll get a request for an audit from the Department of Labor. Department of Labor, believe it or not, shares an office building downtown. It's the federal building across from the courthouse where the bankruptcy court is. They're on one floor below the IRS. And I think they share the same cafeteria and the same lady downstairs making the cafecito. And so what happens is the Department of Labor says, hey guys, I got a case for you, IRS agent. I just went in and audited this company, and they totally had, it's a mess. It's just a complete mess. They don't know what they're doing. Then you get a letter from the IRS. And the IRS is going to do their own audit. And they're doing it for the misclassification under the trust fund recovery penalty, right? Then you get sued because those employees go talk to a employment lawyer. So now you got the triple whammy. You're gonna have personal liability from the IRS, personal. You can't even close your business and start a new business. Like, it's personal, it's sticking with you forever. Now, good news is you can go to a lawyer, a tax lawyer, and what the tax lawyer will do, they will hopefully negotiate the penalty down, say it was our first time, we're really sorry, we didn't mean it, and get the company on a payment plan where the company and the owners are jointly and severally liable. So as long as the company stays on the payment plan, the liability will disappear for the owners too. Problem is, it's easily over $25,000, and any IRS penalty over $25,000, the individual owners will get a tax lien. So then they go try and buy a house, and then or they try and get a loan from a bank, and it's like, right, red flag right there. So again, Department of Labor, IRS, and the courts, that's like the perfect storm of a nightmare for a company. So if you want to play it really, really, really safe, just stick in this area, right? Stick in this little zone right here. Now, obviously, if you have a good lawyer or if you have people giving you good advice, you can get closer to the line. Just be careful, because when you cross over, it's a fuzzy line, and once you cross over, and then you're playing dangerous. I went and did a complimentary employment audit of a freight forwarding company in Doral last week, and I asked them this question, and they go, oh yeah, everyone in the office is salary. And I was like, what are their job descriptions? And it was like, basically they were like bookkeepers and like admin people, like filling out customs forms for this freight forwarding company, which was really cool. You go to their warehouse, and it was all like generators and car parts and air conditioning stuff going down to the Caribbean, which, like, if you want a washing machine in the Caribbean, you've got to use one of these freight forwarders. Anyways, and so they were playing this game. Now, they might be generous. They might be paying a nice salary. And all these people might be perfectly friendly, and they could work there for 25 years and everything goes fine, right? That's one version of the story. Another version of the story is you catch one of the people stealing, you fire them for cause, and then they go see an employment lawyer, and the employment lawyer says, well, what about all that overtime you worked? And they go, what overtime? And they're like, come on, didn't you work some overtime? Like maybe 5 hours every week, or like twice a month when you had to do that last thing on the Friday? And then they get the lawsuit and they can't defend it because they never bothered to keep time records. So that is W-2 versus 1099 in a nutshell.